Today, we're diving into the world of risk management when investing in Bitcoin and crypto. I was there when Bitcoin was worth only a few $100, and I'm still here as the price smashes through 100K. You might be thinking, how? Bitcoin is so risky. How do we even profit? Well, the first step is understanding the types of risk involved in investing in crypto and Bitcoin. Let's tackle them one by one. Volatility risk. Bitcoin is very new. There are high school kids older than Bitcoin at the time of writing. Satoshi Nakamoto invented Bitcoin in 2008 after the global financial crisis, and 17 years later, it's still in its adoption phase. You can think of volatility as growing pains, the price we pay for being early adopters of such a groundbreaking financial system. When you zoom out, you'll see that over a 10-year time frame, Bitcoin has consistently outperformed every other asset. Stocks, real estate, gold, you name it, Bitcoin has trumped it. Bitcoin is like a gigachat just collecting gains while others squabble. Bitcoin is not about day-to-day gains. It's about building generational wealth that can retire your entire bloodline within a decade. While the price may fluctuate in the short term, it's pretty clear where Bitcoin is headed, up.
The point is, if you have the superior asset, it's going up forever, Laura.
Human error risk. Like Spider-Man said, with great power comes great responsibility. Bitcoin offers unparalleled freedom and security, but since it's global and decentralized, there are no institutions to act as a safety net when you fuck up. Simple human mistake can cost you so much if you're not careful. Losing private keys, passwords, or seed phrases. Oh no, what was it again? Your private key is your gateway to your Bitcoin. If you lose your private key, you lose access to your Bitcoin, which lives on the blockchain forever. Keep your hardware wallet safe and back up your seed phrase physically, never digitally. Or risk losing the fruits of your patience into the void. Ideally, log into your hardware wallet at least once a year to ensure that A. You still remember your password, and B. Your funds are still there. Sending crypto to the wrong address. You know when you're in a rush, you stop reading manually and just hit send? Yeah, don't do that. Bitcoin transactions are irreversible. Sending funds to an incorrect or invalid address means your money is gone forever. There's no customer help desk to recover your password. You are your own bank. Before sending, triple check the address and send a small test amount just to be safe. There's some malware that changes addresses when you copy them, so double and triple check. It's always better to be safe than sorry. Wrong blockchain or token address. Maybe you're in a rush to get a new 10x token, so you just opened up a random online wallet and smashed the buy button. Have you checked which blockchain the token is on? The Solana blockchain is not the same as the BNB Smart Chain. Even Ethereum has dozens of Layer 2 solutions, and you need the native coins for gas fees. Ensure you do your due diligence to research what you're buying first, then go to CoinMarketCap or CoinGecko to research for your token. Check which wallet and blockchain it supports, which exchanges or dexes it's on, then copy the exact token address to ensure to buy the correct one. And after you bought the token from the exchange, ensure you put it in the hardware wallet if you're not gonna sell it within a long time. Mismanaging wallets. Poor wallet hygiene and management can lead to losing funds or getting all your stash stolen. For example, imagine you're at a cafe and you leave your hardware wallet in your pocket while you're distracted by your phone. a pickpocket can see the opportunity and snatches it. Without a backup of your seed phrase, you just lost all your crypto. Always keep your physical backups in a secure location, separate from your wallet. Falling for scams. Full-time scammers are everywhere, targeting the uneducated. Sometimes, these scams have nothing to do with crypto at all. For example, have you ever opened your email to find a message saying you won 1 Bitcoin or 30 Ethereum, and all you have to do to claim it is to click this link they sent? Well, first off, don't click that link. In fact, don't click any dodgy links at all in emails. Most likely, it's a scam. Scammers are using fake websites and emails to make you click on phishing links that will reveal your private keys, or send your token to them, or drain your wallet. No wallet companies or exchanges will ever ask you for your private keys. The only person who asks you for your private keys wants to steal your crypto. Non-crypto related scams. There are many shapes or forms of this one, but it can be simplified like this. Someone approaches you, asking for money, calling it crypto investment funds, trading bots, copy trading accounts, new token launches, or an MLM-style platform. They promise amazing returns, whether it's 1% a day ROI, or 100x after launches, or buying package A with X dollars to get XX amount back. So you put your money into an account. You may see the account growing on screen. They might ask you to refer some more people for bonuses. But when you want to withdraw your money, either you need to pass some locking period, or you need to pay a fee, or for whatever reason, you can't fully get your money back. So you Google the company name and add the word scam in the end. You see hundreds of other victims. Unfortunately, many of these scammers aren't even involved with crypto at all. They just want your money. There are many ways to lose your money in crypto if you're not careful. Most of them are silly mistakes you can avoid if you have studied, researched, and practiced. Fun fact, did you know there are around 4 million bitcoins lost now because of human error, particularly lost seed phrase and passwords? Yeah, that's 4 million out of the total supply of 21 million have not been moved for years. Maybe they're hodling really well, or they lost access to it. Regulation risk. Bitcoin is the everyday people's financial system. There are no governments or institutions that control it, which makes Bitcoin special and revolutionary. Governments can view Bitcoin as a currency, commodity, security, or a potential threat to the existing financial systems. This is evident in the way Bitcoin's legal status differs by country. Some nations, like El Salvador and Argentina, encourage and embrace its use, while others like China impose heavy restrictions. These laws often confuse investors and businesses, but there is really nothing we can do to control it other than to move into a crypto-friendly country. No one is forcing you to stay in a country with restrictions on this freedom money. We can vote with our money and move to avoid this regulation risk. Emotional risk. Humans are emotional beings. We'll tackle Bitcoin as an emotional journey more in another video. In a nutshell, the extreme short-term price volatility can trigger powerful emotions like greed, fear, FOMO, and even despair. These emotions often cause investors to make impulsive decisions that hurt them in the long term. A very good example that many investors might be facing now is FOMO, fear of missing out. It's the feeling of wanting to rush out and buy the newest iPhone model because everyone and their mothers have it. Investors panic buy at the peak, afraid they'll miss the boat. What they don't realize is that the peak won't last, corrections will come, they will lose so much more than if they just steadily bought at the pace they planned beforehand. We call it dollar cost averaging, DCA. To minimize this emotional risk, we first need to switch to a long-term investor mindset, ideally holding for 10 years, with a minimum of 4 to 5 years to get through one 4-year cycle. Historically, data show that no one loses money if they held for more than 5 years. Any dips are buying opportunities. If you want to learn more about managing FOMO and discover more risk management strategies, check out my course Ascension, perfect for Bitcoin newbies and seasoned crypto investors. You can access the first part, Initiation, for free as a special gift. Link in description below. Investing in Bitcoin and crypto can be risky, but so is investing in any other asset class or not investing at all. And with the right strategies, you can manage this risk effectively. Data show that Bitcoin outperforms stocks, gold, real estate, and is much safer in the long term as well. Bitcoin has never been hacked, it's always available and runs 24/7 globally. The Bitcoin blockchain is the strongest and safest network, and is only growing stronger day by day. So don't worry about it. Until next time, stay informed and invest wisely.